But you're the vice president of Fidelity National. It took you a while to get there. Tell us a little bit about you.
So I'm a title guy
at
heart. In our business, we got the two sides of title and escrow. Done a little bit of both, and sales is another part of it too. But I've kind of grown up in the title business. My dad's an old crusty title guy, and brought me into the business as a youngster, and learned it as an early age. And title insurance per se itself is pretty boring. On that side of it, researching the properties and going back into the old lot books and those types of things. But it can be interesting too if you're kind of a title nerd, and I enjoy clearing title issues, getting the deal over the finish line. That's kind of what I like taking pride in is getting those sticky ones and clearing them all out and getting a new title for a new buyer, so that the buyer's got clean title and the seller can walk away with their proceeds. Like you said, Ticor, pay them quickly. The seller's going to want their proceeds too. So we get all those things out the door as quickly as possible.
Very good. Very good. So talk about it. We were just talking about, is it a buyer's market? Is it a seller's market? It takes two to tango. We always talk about high prices as if everybody wants that. Well, if you're a buyer, you're not in the market yet. That may not be. We just talked about the Federal Reserve doing their maneuver. They lowered the short-term rate down today 25%. Didn't do a lot for our mortgage market. In fact, we edged up slightly in the various markets. What do you guys see? You think it's a buyer's market? We had Ryan Pullman, which is in your group, came in, and he said we're firmly in a buyer's market. It's been about a month since then. What do you think?
Yeah, absolutely. I mean, what we're seeing is so many houses on the market, so the buyers can take their time, get their make their choices, and be picky. It's not like it was back 5 years ago when everything was getting 9-10 offers, and you walk in the door at an open house, you better make your offer right then or you're going to get beat. So it's completely a 180 from that. And the buyers are kind of having their way about things.
Yeah, they are. So tell us a little bit about title insurance. You mentioned that it's kind of boring. It is in the sense that you're buying an insurance product, but it can be just tell us a little bit. Tell us about that process. I have somebody that I had recently. I've had a few people this year, Jim, where they seemed experienced, they had good money and things, and I realized they hadn't bought a house in 25 plus years. And they're like, I'm not familiar with the process right now. Tell us a little bit about that escrow process from the time that an agent accepts an offer, brings it and submits it to Ticor. Tell us a little bit about the process of what you do.
Okay, yeah. So when an offer is submitted to Ticor, we will take the open order and purchase contract and the earnest money. And we'll start a title search. Escrow will start their process on getting payoffs and taxes and bringing everything current. And the title side will research the property. We need to make sure that the owners truly own the property.
Sure.
What encumbrances are on the property? Is there a first deed of trust, a second? Are there any liens on the property? Tax liens? Any kind of encumbrances that the new buyer's not going to want, right? We ensure that a buyer gets clean title to their property when they're paying $500,000-$600,000 for something. So title insurance is crucial to every transaction and refis too for that purpose for the lender. But we are searching, for any kind of clouds on title. Yeah. Are there any heirs missing? Did somebody pass away and there's heirs in different states? And how was title held? Was title held into a trust? Was it, three friends that had an LLC together and they invested in a property and now they're selling it? We need to make sure we get all the signatures, just get all the behind-the-scenes things that need to be taken care of before we can give clear title to that buyer.
Well, you talked about it being kind of boring. I bet you a time that wasn't very boring was around 2008 and 2009 and 10 when people were coming out of the woodwork with bills that were not paid, progress payments on homes. I bet that was quite a time to be in that business. Were you involved back then?
Oh, yeah. I was boots on the ground. That was ground zero for foreclosures here.
So that's the time you really wanted to have that title insurance because you'd have contractors that said, I didn't get my progress payment. I'm leaning out the house. They were unrecorded liens, but they were still valid at the time. But that was a pretty chaotic time.
Very chaotic. And, a lot of people weren't making their payments.
Sure.
And they weren't paying their HOA. So you had HOAs foreclosing. You had banks foreclosing. You had mechanics liens popping up. It was definitely a weird time, so to speak, of just different kind of liens. Every single day was something new.
So you also do errors and omissions type of insurance? If somebody doesn't, tell us about that. Errors in public records that you're covering?
Yeah, so we'll search the public records, and if there's something missing, we can offer that coverage too. If there's liens or anything that are unrecorded. Depends on the type of policy you're getting. But, again, we're trying to give clear title. We will give clear title to the buyer at the end of the day.
So here's a question. When you write policies, you've researched them, you're doing good due diligence. How often do you guys ever have to really pay out on claims? Probably pretty slim.
No, true, but you'd be surprised.
Okay.
And some of the claims are big, right? I mean, you can have a property that got sold and then an error comes out of, somewhere that says I had, 20% interest in this property and I have no reason to sell. I didn't want to sell this property. You get family disputes where there's 4 heirs and 3 of them want to sell, and there's one that says, nope, that's the house we grew up in. We're not selling mom's house, And so you can kind of get those kind of claims.
Well, that kind of leads me into Alta. Talk about what Alta, many people don't understand what that is. Even agents sometimes don't. You have a standard policy. Describe what an Alta policy is.
An Alta homeowner's policy will give you extra coverage in that for mechanics liens. As you mentioned, there's, maybe some unpaid bills. A lot of sellers will fix up their house before selling it, and if they didn't pay their contractors, and there's not a lien yet you close, and then 30 days after closing, mechanics lien pops up. The Alta homeowners coverage will give you coverage in that.
Very good. So describe a little bit more about that, because people have sometimes said, I just don't want to pay that extra amount. But talk about the different things that it actually covers over a standard policy, especially the unrecorded liens, deeds, different things such as that.
Sure, and also gives you coverage for forgery, post-policy forgery. If there's forgery on your house after you own it and somebody tries to sell your house, you can get coverage that way too. We see a lot of forgery, people trying to claim that they own houses. People ask, well, how can you steal a house? Well, if you go in and make a fake ID and forge the owner's name, you can try to borrow money against it or actually sell it.
Well, speaking of that, I have some property. I'm a broker up in Oregon. I'm also in California, but I own some raw land up there. Some of it not worth very much. Some are worth a whole lot. And that's something that a lot of people are trying to do, right? Because nobody lives on the property. They forge documents. If it's raw and there's no income producing, maybe that doesn't get looked at very often. For example, I have some property in Klamath Falls area, half acres on the lake. They're only worth like $15,000, $20,000, but there's something that somebody can tie up. Tell us ways that you can prevent that if you're maybe an owner of a property, and also just little things about that, because, we know with fraud, we know with AI right now, right? Almost every time I took a phone call yesterday and I was talking to this lady and something sounded weird, I said, are you AI? And she goes, yes, I'm an automated person. It sounds so good. Things, documents, videos and everything. People are able to report themselves as somebody else, portray, easy for me to say, as somebody else. And that tells what things you can do to either protect yourself or what you're doing proactively to protect people.
Yeah, I mean, vacant land is, as you mentioned, it's very easy for fraudsters to find out that you're an out-of-state owner. There's nobody on the property, so they can make representation that they own it because there's not like a tenant or anybody in there.
They can get a notary deed. They can forge something, file it in the county electronically, never have to actually go in. Correct?
Right.
Things like that.
Yeah. So what we would do on vacant land is contact the owner based on tax records, and then any kind of due diligence we can find to make sure that we are truly talking to the owner. And now obviously with Zoom and those kind of, we can get in front of them. We do some remote online mobile notaries, video, so we can see IDs and things like that. But yeah, there's a lot of due diligence on vacant land that we have to check a lot of boxes before we can just close those deals.
Sure. We're going to be coming up on a break in just a little bit, just a minute. We're going to be talking more with Cesar Espinoza with High Court Title and Vice President of Fidelity National. So, Logan, we have some questions. What we're going to do is go through some, we've talked about every week about how the news can be confusing if you're thinking about should buy or sell. So we got 5 different questions. Why don't you lead off with that first one, Logan?
Absolutely. So first I wanted to ask you if you think it's a good time to rent or buy, and maybe if a rebound may be coming to the market soon here in Las Vegas.
Sure, that rent or buy. So here it is in a nutshell. As realtors, we always want to say, yes, it's a great time to buy or sell, but we know that it really is not. And for many people right now, renting may be the better option. Here's a great way to see if a house would rent for. Somebody took me over to their house. I did a listing presentation on last Friday. We looked at the house and we looked at what it would be. Just go to Zillow, give an address you like, look at the 20% down scenario, and you see a payment. It says $2,900 all in, right? Then go down to the Zestimate about 2 inches lower, and it shows what the house would rent for. the house we were talking about in particular, $2,248. So to buy the house at the given value with 20% down with your all-in payment, right, including our HOA taxes and insurance, what's called an impound account, it's $700 a month more expensive to buy. Now, we know that more average everyday millionaires are made from house equity, getting a home and getting it. Yes, it's not because it's so much, quote, a great investment. It's more a forced savings account versus renting. Logan's only 19. He's on his way to 20. The goal this year, if he has the year that he hopes to have, we're going to have some money going for him. And before his 21st birthday, he's going to be hopefully buying his first house. How old were you when you bought a house? My first was 27.
I was going to say probably 28.
Yeah.
Wow. Yeah, I plan to do that much sooner. Hopefully, 21 and 22 would be
here's the thing.
A great goal.
We're still a move-to market. People are moving here. While we have our ups and downs, we know we just hit the all-time high. This is going to lead you into that next question. So right now, as an affordability, for a lot of people, it may be lower price to actually go ahead and rent. However, we know about getting priced out of the market. What was it, Jim, we were talking about pre-COVID? When we talked about prices, they were still in the high twos. And I remember hearing somebody else that I follow said, I bet you we get all the way up to $315,000 this year. Well, $315,000, we've eclipsed that by, $170,000. There's a point where you've probably heard the term getting priced out of the market. There's two ways to do that. One of them, you just can never save up the home because it continues to appreciate faster than you can save up that down payment. So the answer is it is definitely cheaper to rent here and in the top 40 metro areas in town. But at what price? Do you maybe miss that market to where you really got to get mom and dad involved? Maybe you saw this story, Cesar. What was it, Jim? They said that the average person used to be able to buy it like 34 years. Now the average buyer age is 56 to buy a home. It's crazy. Because it takes this many more years for a person to become an adult. I'm 57. I don't think I really became